Hello and welcome to your Daily Five. I am Jane Gallina, also known as Airplane Jane, and you can reach me on social media on Twitter, Instagram, YouTube, LinkedIn, my website, cjanetrade.com, and always at my email if you ever have any questions at jane@cjanetrade.com. Let's get into it. So this week, I am really concentrating on the energy sector, in particular oil. We have seen that oil has definitely risen since March of last year and since December in particular. We are looking at the USO Oil Fund right here on the daily chart, and we can see that we are just starting to break out. We have very little resistance above us, but what's even more important is when we look at the bigger picture, we go to that weekly chart, we see, oh my goodness, we have a nice gap to fill. Computers, humans, we all like to fill the gaps. So looking for this to be filled up above 60 on up to roughly 68, 70 area, there is a nice big gap to be filled. So keeping that on watch, looking like we might see oil hitting 100, 120 a barrel for the oil futures. So definitely looking at the energy sector, which leads me into XLE, the Energy Select Sector Fund. And this one as well is also breaking out. So liking the ones that are moving to the upside, breaking out, very little resistance. For the year, we see that we are up at new highs. And again, on that bigger picture of the weekly chart, we see we are testing resistance for a further breakout. This will usually lend to those shorts being squeezed, new buyers getting into it. And with the economy slowly moving forward, more people traveling, more people out to work, it does tend to create bigger demand for the energy sector. Now, the top two holdings for XLE are XOM, Exxon Mobile, and Chevron. So I have included those two today. We do see that, yes, we are moving to new highs for Exxon Mobile. So looking for this pattern to continue. Now, we are a bit extended away from our 4 EMA, which is roughly just below $70. So I would use roughly 70 as my support if I were to get into Exxon Mobil. And if we continue to see oil move up to 100, 120 a barrel, we are going to see this breakout higher. I believe we could see this go up easily another 20%. Right now, we do have the oil futures hovering just around $87. So that could be a nice big move to the upside for these oil stocks that have also had some layoffs. So that does mean that there can be better performance in numbers when the cost of fuel increases. Looking at Chevron, CVX, again, our support that I would use would be 125. I like that round number as one that people would probably say, hey, this is going to be my make it or break it point. And we do have clear skies ahead, right? We can see that this is moving up to new highs. A lot of people do also like Chevron for a dividend investment stock, right? This will pay you nicely as well. Last up is going to be DJP, the Bloomberg Commodity Index. Why? This is going to include oil as the top position, but all commodities tend to rise when that cost of fuel goes up. It costs more to transport them everywhere. Also, a bit of sign of inflation, right? We've heard that inflation is roughly at 7.1% for December. And without any quantitative easing, interest rate hikes happening from the Fed, we can see that commodity prices will likely continue to rise. Now, once we do start to hear from the Fed a little chatter and action that they are going to raise interest rates, even 0.25% could slow down that growth of commodity pricing. However, it's still likely to rise for a considerable amount of time. And then by the end of 2022, potentially slow down further. So looking for this as a potential longer term holding, maybe even into the summer, into June, when we might see further action from the Fed. But like this, we are very close to breakout point. We have a little bit of a gap there that was created today, but looking as long as we can stay above 2850, that is going to be a good support to hold. And on the bigger picture, we have more ability to move up. Now, when you look at these volume candles as well, this is a weekly chart we're looking at now. Last week had some massive volume in it. We have not seen volume in it like that since January of 2020. That volume, and you bet it, dark pool activity on XLE, DJP, PBDC, a lot of commodities can move these and move them in a big way. Remember, the dark pools are the really big guys that have lots of money in the market. And when they place a position, if we go above it, that means they were buying. So again, looking at DJP, because it does have 12%, 12.72% of oil as the top holding. They also have natural gas. UNG is also setting up for a nice potential move as well. There's a lot in this sector to keep your eye on in the commodity sectors that could very well be riding this inflation bubble. If you're interested in learning more about the dark pools, trading around them, please come and join me over at thedarkpools.com at the training pits. And that's your daily 5 with Jane Gallina. Carpe profit, seize those profits one trade at a time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.